If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back to another Hbar update. In my last video, we were suggesting that as we have now reclaimed the moving averages, we must maintain them in order to get continuation to our technical target. So we were calling for this and this to be met. We can actually see that we closed beneath the 1272. So it's nice to see that we did get the pump, but unfortunately we didn't get that continuation. Why was I targeting these areas? Well, if we now zoom out to the daily time frame, we can see that the next level of resistance was the 786 fib, exactly where we saw the highest body candle close. So in order to get this continuation to the 1 fib level, 7.6 cent, as we've been talking about the past few days and weeks, we need to see a daily candle closes above this point. So we did start to get going. But unfortunately, guys, as this move up and down has all happened within one single candle, the daily candle, it's not the best of signs. Why? Let me just remove all the drawings from yesterday. Why? Because it's creating this big wick to the upside. Previously, when we were at this key level of support, we're seeing wicks to the downside, suggestion that it wants to go up higher. Of course, there was a resistance in the way, sending us lower, but we came back down and we saw wicks going down, a suggestion that the bulls are stepping in from this location. And so we started to see the breakout, because that's what should happen as we're holding this and confirming as support, with bulls protecting this level. However, unfortunately, as we went ahead and met these targets at the 786 fib, we've got this rejection, and it looks like in 7.5 hours time we could be closing back underneath this golden pocket, a suggestion that we have failed to break out from here, and it's confirming it as resistance, with a suggestion that we should now continue lower, and the level that we must now hold, which is very significant, is again these marked out levels that I've shown you. It's these two dotted yellow lines that I'm now going to create an area out of, just like this, and going forward we must maintain this, simply because what could happen right now is invalidation of this uptrend. How may you ask? Because we haven't actually formed the golden cross, and this is what I've been talking about in every single update the past week, that we must see this cross actually form to confirm this breakout through the 200 EMA, which we predicted all the way down from over here, pumping into the golden pocket, given here totally free on the channel. Hopefully you took action on this over 25% move, with a peak today at the 786 of about 35%. If you didn't take action on this move, maybe if you want to get educated and 10x your learning curve, I have multiple offers in place: a book, ebook, a course, mentorship plan, and a Discord community. I've also got discounts at the moment, so if you want a discount, it will last until the end of this month, because we've got multiple holidays coming up. So use the links down below, message me on twitter.com for the discount promo code. It will last until the end of this month. And now it is so important to see this crossover. This, for me, is a very scary sign. I have to make this emergency warning video for you guys, because right now, this is a huge level of resistance that we've confirmed, essentially. And with that, we're looking to come down. And as this is actually not yet formed, there's a higher risk that we see an aggressive dump. These actually fail to cross over, forming an EMA repel. And as I've shown you over the past few days, this is what's actually going to happen if we see the 55 and the 200 EMA repelling, where they come close like they're about to cross, and then they fail to cross. The cross is a suggestion that we've confirmed this breakout, so we're just coming down to continue breaking out in an uptrend. But if we see the failed cross, the EMA repel, just like that, and how does that come? We need an aggressive dump. If this aggressive dump comes, then we could be, over the next 2 days or so, then we're going to be seeing a potential EMA repel over here, where eventually we fall back underneath and start retracing back down to this low. I've always said that this is a risk, because when you come into the golden pocket, you're meant to continue lower, and pretty much every single update I have been saying that. But there's a way of invalidating that by holding a key support, and I have mentioned before that previously we were saying this level now needs to hold. But as the days had gone by and the weeks had gone by, these moving averages started dragging higher, and so it became from this low to the resistance that now needs to hold. And so we've now created a new area of support right over here, and going forward, if we want to see explosive moves to the upside, we need to hold this low at all costs, everyone. It's so vital, otherwise the big warning signs are already there. This is a huge wick rejection. We're coming in now. If it's really aggressive, there's a lot of momentum to the downside, and we start dumping big red candle tomorrow, then it's likely that we could see an EMA repel, where you form a slingshot motion to come back underneath, and we're retracing back down to this low with potential for lower than this. We need to see bullish signals appearing down here, just like this double bottom did where we reclaimed the moving averages. So it's vital, as we were previously below the moving averages, we're continuing lower. This level stopped that from happening. So we would really need bullish signals flashing down here if this, of course, golden cross does not form and an EMA repel forms, suggesting that price is coming back down to this low. Guys, good luck over the weekend. It is very vital to see this level being held as support, being confirmed, as this wick rejection right here has pretty much forced me to make this emergency update with warning signs that if this now sees large momentum coming down to the downside and this EMA repelling, we're looking for continuation lower. What we now need to see is in the immediate short term, we've got these dotted lines, so maintain above the high one, that's the 20 moving average. So if we come down to here, we start to see wicks to the downside as we've previously seen, we see what the result brings. So yes, we've got a wick rejection right now. Yes, this can all go wrong, but if we can now see wicks rejecting this area, it's another confirmation that this level is support, and we're looking for another go at trying to break through this to retrace back up to this high. Keep your eyes peeled, keep your alerts on, set alerts down here on the moving averages. If this is lost with a daily candle close, it is not a good sign, guys. I'll be back on Monday for you, so please don't worry. Prepared you guys for over the weekend. Hold this as support for the explosive moves, or this whole purple area, the 20, the 200 and the 55. Lose this all and we're retracing back down to this low. You've now been prepared for over the weekend. Please don't forget to like, subscribe, comment and share. Only 10%, not even 10% of you liking, with all the free valuable information that I'm giving in these videos, and multiple of you are actually coming out to me and saying that you're learning. Please show YouTube that you are actually enjoying these videos, and the best way possible is to leave a comment and a like, and if you could also share, it's much appreciated. We're so close to 7k, I think it's 50 subs away, so make sure you subscribe on your way out, as half of you are not subscribed. And if you want a discount promo code on my education, which includes the ebook, the mentorship, my course, I've also got a Discord community. Private message me, links down below on Twitter for the discount promo code that will last until the end of this month. Cheers everyone. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.